Hello guys, how are you doing? No, it's not Batman that is talking here. My voice is very rough. For some reason, whenever I get a cold these days, it just sticks to my voice and I sound like Batman. It is what it is. Twitter recap. I have a lot of stocks today, not stocks, charts today to show you. And as I've start by saying always is these guys that I show here do a very good work, so follow them on X, on YouTube if they have that, and all that good stuff. They are really cool guys. And also, I would highly appreciate if you follow me on YouTube, on Twitter obviously, but also on Substack, where I do most of the videos for this coming bull market in commodities mostly. So yeah, let's get straight into business. Hey, but before that, I wanna briefly shout out here to Andy from Finding Value Finance. 2 days ago, I had a two-part video with Andy. One is gold and silver, and the next one is uranium and basically energy. We're looking at a little bit into oil and coal, I think, if I remember correctly, very briefly. So check it out there with Andy. He's a really cool guy, and he does daily updates. I think at least 2 videos per day, at least. Really cool guy. Check him out. Good. Charts here again. I have a lot of charts, so I think it will be one of the more longer videos, but it's okay. It's fine. I think maybe I have shown this last time, but anyways, it doesn't matter. This is a hugely underrated chart in my opinion. It's also a ratio that I've been following for a long time. That is the GDX ETF divided by gold. So basically showing here that actually the gold juniors is about to outperform gold. And that is basically the definition, at least like a top 2 maybe, definition of a mining sector bull market, when you have the miners outperforming their underlying metal. And this is basically what's about to happen here. I'm not going to read it all. Just the first 3 sentences here is: send this chart to your friend who remains overly pessimistic about junior miners. That's it. That's all you need to know. It's just an incredible chart, incredibly early, and hey, juniors, gold miners looks incredible. Both, in USD terms, but also in gold terms, and gold looks fantastic. It's great. Peter Kraut here with silver returned average 332% in the last 3 Fed rate cycling cuts. It's not zoomed in as much here, but you can basically see here that whenever they cut rates, silver rallies. So when they cut, probably what's about to happen. Again, nothing is 100%, I know, but I'll take my chances on that one. Speaking of Finding Value Finance here also, he has SILJ is one to watch. SILJ versus silver futures pricing. Now is the time to find the patience to hold and outsized returns. Again, similar here, you have a long trend line breaking here. We have some wicks above there, sure. Also here you have a bottoming pattern and inverted head and shoulders. It seems like maybe not as quickly as gold miners, but the juniors in the silver miners is also ready to pop here. The level to get above, in my opinion, is, if I remember correctly, 0.43. And when silver moves, it moves. So Rashad here with another explosive rally underway in silver. Back in 2011, silver formed a similar consolidation and rallied roughly 200% within 8 months. 200% in 8 months. Then we are going to see, 60. What is it? I can't do the math here. Oh, it's almost 200. But yeah, $50. It matches perfectly. In the short-coming months here, if that happens, cool. Again, if we see this straight line up here for silver hitting 50, we are also going to see a pushback, into at least 40. The great martyrs here, this is the VIX. So this is the volatility index for the SP 500. You can see here that we're actually trying to make a rounding bottom. We have a trend line coming across. If it breaks here, you know volatility is coming back. And usually that is the markets dropping down. So if that's the case, we could be in for an S&P 500, you know, correction here in the short term. Rashad again. Once gold passes through a horizontal resistance around 2,390, it should be headed towards all-time highs. So this is a shorter term time frame. We are talking the 2 hourly. And yeah, you have a pivot high here, huge collapse, again, zone here. So I agree. If we break here, I can't remember if we have done already. I can't remember the gold price. It shouldn't have broken if I remember correctly. But again, yeah, we're going to see the highs there in this whole thing here. But then also potentially a pause before then breaking higher. So rock bottom entries, SILJ and versus silver basically. Same thing here as Andy. You can see, yeah, this is the inverted head and shoulders, momentum breakout, retest. Yeah, man, silver miners in relation to silver also looks extremely, extremely potent here. I like everything that I see currently on a weekly basis and up for precious metals. Everything basically. The big hurdle, or the last big one, will be when gold starts to outperform the SP 500, which happens at roughly 0.5 in that ratio. We are at, I think, 0.4 or something like that. So 0.44 maybe. But anyways, we're like 10-15% away. So great martyrs again here with the crash in 1929 and then 2024 potentially. You have the broadening structure down here, like a lead-in, and then we had the huge surge, and then the rest is basically history, going from roughly 400 below 60. Wow, that's a big drop, Jesus Christ. Same thing here again. You had the broadening structure there, and now we are just coming up heavily. And I'm very confident that this, of course, when you have a chart going vertical, that cannot last forever. And at some point in time, we are going to see true devastation. At least a massive correction, a massive correction. Again, when will it happen? Timing wise, that's always difficult. But again, if you were to have this on the log scale over here, we are basically going vertical. And if you do that on a log scale, you know that that cannot go on forever. It's impossible. We shall see when. Seasonality is not a roadmap. That said, it's time to keep an eye open for weakness in the US dollar, which also, I think, with this weekly close here is pointing to exactly that. So we could be in for, how long is that? Is that roughly 20 days of weakness? But we are at such big levels that, you know, maybe it cannot recover from that. The 104 is very, very important. Grady here, a good man, again, a long text here. I will not go into details. You can clearly see here also that the silver spot price, whenever, again, we have talked about it so many times, but maybe there is some new ones to it. New guys coming in here, again, breaking 26, in my opinion, was the level to get through. Breaking out into 30, retest, breaking out again, deep retest below 30, and now we are above at roughly 30, 31. Silver looks fantastic. Together with the gold, I am extremely, extremely bullish on the outlook for silver. But I also know that I have to be able to handle the volatility, because the pullbacks in silver will be very gut-wrenching and a part of the game, but still, it's not going to be fun. Great here, this historical move that is now in the making. I think it's time to revisit the upper black trend line of the massive channel, repeating the precious metals move from 2000 to 2007. So this is the HUI, the gold bulk index, and we can see here we are basically very close to a potential breakout here. And yes, I think it will happen given, you know, the entire structure. It looks good. Seen it multiple times, 1, 2, 3 touches there, probably a fourth, a tiny pullback, and then boom, off we go. And that's also a big check mark in the gold bull market, so that's beautiful. That is beautiful. Axel, constructive chart for gold, possible short-term rectangle that can act as bullish continuation. So again, we have the 3-year-long sideways action where 1, 2, 3 on top, 4 there, tiny bull flag below, and then boom, into yet another bull flag. So yeah, I agree, gold looks really good. It looks incredible. Patrick, Karim, this is from 2020, May 2020, so just after the COVID madness. That is when we popped there, and yeah, you can see here the arc into 2023, and again we are basically roughly, where are we? We are roughly here, right? Yeah, maybe a bit, maybe like here, but the roadmap were very precise. So again, great call there by Patrick with the cup and handle, and yeah, just goes to show you that long-term patterns, which are a lot less noisy, you know, they are, you can have some very good calls with the long-term stuff. So great one there by Patrick. Silver broke out from the weekly long contracting triangle formation. You can see Rashad here, massive breakout there. Was it CPI? No. Yes, I can't remember. There was some data coming out, massive move, and I think we gave a lot of it back, and we are roughly here at 31. So we gave a lot of it back, but still overall this is shorter time frame stuff. Silver is, yeah, it doesn't change my mind one bit. Dixie here, also, you know, having a great, again, the charting from Burak is just amazing, but that's a different talk. It's just amazing. We have the Dixie here collapsing, and yeah, some important trend line has been lost for the Dixie, and I think in the short term here, you know, the next month or so, the Dixie is fighting. You know, it's probably going lower. Trader here again, silver has broken out its 4-hour chart resistance trend line. You can see here we're breaking out, we're retesting. This is July 11th, so that is just after the pop there, I guess. And we're basically, I think, we're at 31 right now, I can't remember. But we're basically, I think, a tad below the trend line, but overall very good structure, and hopefully we're going to grind higher again. A lot of silver stuff, actually. A lot of silver stuff. Silver chartist, excuse me, Steve Penny, does not post much on Twitter, but when he does, it's really good. I know he has a website, a homepage, where I think he does most of his work. So if you want to check that one out. Uranium versus gold, the ratio backtesting support. Back in January this year, the uranium gold ratio has gotten extended, with the uranium sector outperforming gold by a wide margin. This we also looked at here. By the way, this is an inverted head and shoulders, breaking out, retesting neckline. Beautiful textbook stuff. I also called it there, the pullback. But once we started to see the pullback, I think we're going to get a check back to the neckline, and then we go again. So I agree here overall with Steve regarding this down here. And if we are to see a move all the way back to the all-time highs at roughly 140 for uranium, meaning, and if we go back here, you know, in like, what's that, 8 years time, whatever, I think gold at that point in time could easily be, let's say, 7K, just to give a number, right? And at that point also, uranium, the spot price, will have 1/4 of that price of what gold has. So if we're talking 7K, uranium spot price, you know, in 6, 7, 8 years time, depending on how fast it gets there, will have, you know, roughly $2,000 to its name. Wow. Fantastic. Ratio charts, I love it. Fantastic. This is just a quick one here. I think you should actually quickly find this one here, save it, and have a look. This is the, as Chris says here, it's crazy how accurate this chart is. Developed in like 200 years ago, well, 150, by a farmer based on solar cycles. And I mean, it's pretty dead on when you're looking at, solar cycles and periods of when to make money. It's really, really crazy. It really is. So that's a fun one. Great artist again, the great Martis. Again, I love the commentary. It's hilarious. Oh, look, mommy, an engulfing candle. That's a nasty one, by the way. This is not so long ago here. A few days ago, we had a huge candle on the Nasdaq where the Magnificent Seven just had a rough day. And an engulfing candle, fear is more powerful than greed. Yep. I think the volatility to the downside is 7 times higher than on the way up. So it's stair-stepping up, elevator down. That's a good analogy. Pay attention. When she, they, them, let's go, book shall be written. Again, the commentary, hilarious. That's why I follow him, the great Martist, for the charting, but also it's just, I love it. It brings a smile to my face. But yeah, definitely at some sort of high end here for the Nasdaq. But we shall see. We shall see. A few more charts before I'll let you go. Trader here with copper. We had that huge move whenever we broke 4 right down here. I turned bullish. That was a beautiful candle. Breakout, retest. A long way. We had a target of 5. It overshot to 520. And now it has come back a little bit further than what I would have liked. I haven't measured the fib, from here to here to see the levels. But again, it seems like the downtrend is broken into a bull flag now. Again, the bull flag really needs to resolve to that upside, which also has the highest potential percentage. But again, copper here looks good still. It could start to be a bit grim here if we start to lose the lows here and the trend lines there. But let's see when that happens. Again, this is not a chart, but this is the speculators' positioning in the US equities futures is at an all-time high. That's usually not the best thing in the world, right? Because when everyone is in, who is there to buy? Trend spotter here with Nike. Over 3 decades of support on the line. So again here, one parallel channel and you have basically framed the entire price action from Nike going back 3 decades. Again, we are close to support here. I expect a bounce, obviously. How high will it go? We shall see, but we do have some, if we were to draw a trend line from the top over here, and then you can actually add one there as well. So you have bullish structure overall into support, so one to watch there. And it has come down from roughly 200, I think, here down to 73, so more than 50%. Last but not least, and that's good because my voice is really, really rough. It's not fun to talk right now. And for some reason it won't let me. What the hell is going on here? There it is. Good. Dave UEC, that's a bigger uranium company. What a beautiful long-term setup here, uranium. I would have preferred to move the chart a bit to the left, but again, it doesn't matter. Big cup here. Again, a very weird chart overall when looking at it here. I think it's a bit different on a log scale. But anyways, we have a bull flag here in the making, and we are on the monthly. So we have 1, 2, 3, 4, 5, 6, 7 candles in the bull flag. The 7 count is usually, noteworthy. You can also see on the way up here 1, 2, 3, 4, 5, 6, 7, 8. So close to that. But anyways, monthly bull flag there on the UAC. That's not too shabby. That's not too shabby at all. Good, guys. That is everything that I have for you. As mentioned in the early stage of the video, follow me on Substack, especially Substack where I do most of it. Twitter also for the charts. I do multiple charts per day, and then YouTube I do throw up videos, occasionally. But again, most of the video stuff will be on the Substack. My voice is over, game over for now, guys. Have a great evening and a great Sunday when you get there. You can see here it's roughly 1 a.m. my time, so I need to get some sleep. Have a great evening, and great weekend, I was about to say. Cheers, guys.